Everyone, welcome to Canadian Mortgage Weekly for another episode today. We are on episode 138, so thank you to all our viewers out there who support our podcast. And it's National Real Estate Day. It actually was yesterday on May 17th, so really pumped to be celebrating National Real Estate Day today with you all. I'll go into what that means for all of us. And we'll also get into some of the news and statistics and stats that are coming out of the market today for mortgages and real estate, because there's some crazy information out there. And I really want to get into that because there's a lot of new information, specifically in regards to bond yields and interest rates and inflation. So before we get into that, let's just talk about National Real Estate Day. So, National Real Estate Day was declared by the Toronto Real Estate Board to be May 17th. So, what does that mean? You might be thinking, does that mean anything to me? Does that mean anything to professionals out there in the market? Well, Toronto Real Estate Board actually declared May 17th as National Real Estate Day because our homes have become one of the backdrops in Canada as to where we work, where we live, where we play. And that's actually taken straight from 𝗟𝗏𝗃. And one of the things that they asked everyone to do actually a few years ago was to recreate a home with Lego bricks, and they had a whole contest for that. They're not doing anything like that this year, but National Real Estate Day has typically been used to celebrate home ownership and the benefits of home ownership. So what typically are the benefits of home ownership? Compared to renting, home ownership, you build equity. What does that mean? Well, if you are owning a home and you have a mortgage and you have a 25-year mortgage and you buy a home, for example, at $500,000 over the 25-year mortgage period, you'll actually pay off that $500,000 loan. And each year you're paying down that loan. So each year you're putting some money towards that payment, similar to paying down a car, where at the end of the loan period, you can actually sell your home and get something for it. If you were renting, you would not be able to do that. You would simply be renting each year, and every year you pay rent. You would not be able to have anything to show for it at the end. And right now, with rents on the rise, it's really hard to build any equity because with all of that money going to rent, you're not really able to save anything automatically through any rent payments. So celebrating National Real Estate Day is one reason to celebrate home ownership and the ability actually in Canada to own your very own home and to be able to pay off that mortgage so you can actually own your own home. So it's one of the benefits of owning real estate. Another benefit of owning real estate is actually you can make an income off of it. So how does that work? Well, not only can you build equity through the ownership of your own home, but you can actually rent out part of your home, whether it is a basement suite or a second unit in a duplex, or even 2 units if you happen to live in a triplex. You can rent out a garage. You can rent out your driveway. You can rent out storage in your backyard if you have sheds or outbuildings. That's all opportunity for someone with home ownership to really dive into and enjoy as a benefit of owning their very own home. Have you ever owned your own home or, been able to benefit that way? I know that when I owned my first home, I was able to rent part of that out sporadically here and there to other friends of mine who were going to university. So it was nice to be able to make a little bit here and there of income to be able to pay down that mortgage payment and some help towards costs involved with upkeep and maintenance of my home. As you all know, I've Probably told the story a bajillion times before, but I bought my first home when I was 23 years old, going to university. So I've benefited off the income part of home ownership and the equity part of home ownership over the years. And I can't stress it enough. If you can get into the housing market, that's a huge benefit for everyone. And it's going to really contribute highly towards your net worth down the road. Plus, if you own a bunch of real estate, you can actually use that as a nest egg. Once it's paid off, if you don't have a retirement income fund, you can actually turn your mortgaged properties into fully income producing rentals. And once that happens, you can have a side income. You can have your pension income. And if you don't have a pension income, you can have an income off your rentals as sort of a mock pension income. And for anyone that's self employed, we all know that it's incredibly difficult to earn a pension income if you are not paying into a pension. So that's one way to actually create an income for yourself that is sustainable over the long term, and also you can increase it over the long term as well. How can you increase it? Well, rent increases, and also each year the market seems to be going up for the rentals. And right now, with rents going up, sort of like a inflation hedge with regards to anyone that owns rental property. So there you have it. National Real Estate Day, celebrating home ownership with regards to owning your own real estate and paying down your mortgage, building equity with your real estate, as well as making an income off your real estate, and all that contributing positively to your net worth and income situation. All right. Plus, we didn't really talk about the other attributes that are not financially related to owning your own home. For example, if you are renting your own home, you can have a lease in place, but once your lease goes month to month, the landlord can decide to move into that property down the road, and all of a sudden, all that investment you've made into that property, you have to move. So by owning your own home, you can actually create a more balanced and I guess, a consistent living environment for you and your family, more stable living environment, because you're not you're not subject to the landlord's or homeowners schedule and what they want to do with their land and how they want to rent out and lease out their home. Plus, you can invest more into some of the landscaping without going into any of the, uh, without feeling like that's all going to be thrown away when you move out of your rental property. You will be able to invest into that landscaping, knowing that those flowers will be there for you year after year, the trees you're planting, the lawn you're watering. I know it sounds basic, but by putting that into your own home, it's going to be there, and you'll be able to benefit off those attributes each and every year. Whereas if you're renting, you may be watering the lawn this year, paying for those water utility bills, but the next year you may be moving on to a new property. So yeah, a lot of different stability concerns with renting a property. And when you're owning your own property, you can remain consistent. So there's some more information there. Just being able to benefit off the consistency of the home ownership, being able to provide a more stable foundation for your family without being subject to the landlords or homeowners schedule or what they have plans for the rental property. You'll be able to build equity by paying down your mortgage, and you'll be further able to possibly potentially make an income off renting out part of your home, whether it is a basement suite, a second suite, a second unit, third unit, if you live in a triplex, or renting out shed for storage space, renting out a garage. I've seen people rent out their garage to folks that need storage for an automobile or a boat. And with that, you can make a few $100s a month just for providing storage, even more if you're able to provide heated storage. And also, if you're renting out part of your home, you can write off a portion of the expenses that you're also putting into the home. So say if you're improving your home, whether it is adding that heated component to your storage that you're providing, you can write off a portion of that expense against the income that you've earned off the rental income. So you'll be essentially paying a little bit less tax by being able to write that improvement off. Can't write the whole thing off because you're also living in that home, but it's something to consider as well. So yeah, so those are some of the attributes and benefits of owning your own home. Wanted to cover off those with National Real Estate Day. Today, May 17th, by 𝗟𝗏𝗃 to celebrate home ownership across Canada. If you're a homeowner, yay for you. If you're not a homeowner yet, then you can get into home ownership today by getting a pre-approval with a mortgage broker. I've been in the business. This is my 13th year. So if you need a mortgage broker, I'm available for you. I work all across Ontario, so you can contact me through the platform you're watching this video on, or you can contact your own mortgage professional if you already have one. Get that pre-approval and just look at what is required to get into a home today and what you can afford, because it's good to have that open. Pre-approvals are free, and it's good to just have that available to you in case you find a property at any point in time, so you can get in and start building your home ownership future. All right. So that's a little bit about National Real Estate Day, and also celebrating National Real Estate Day. A big part of the Real Estate Day is real estate agents. And why is that? Well, real estate agents provide the services required to purchase and sell real estate. And one of the things that I like to celebrate with celebrating National Real Estate Day, on top of the ability to build equity, to make an income off your home, to being able to provide a stable and more consistent environment for your family by being able to own your own home and have pride of ownership, is to celebrate real estate agents. And real estate agents provide a great service to us. If you're a buyer client for a realtor, then as you probably know, or maybe don't know, if you're a buyer client for a realtor, there's no fee to use a realtor for the buyer to find a property. And a real estate agent can be an invaluable tool to being able to know what to look for, to find that perfect property, to find those other properties that are not listed on the market yet before they hit realtor.ca, and to be able to negotiate on your behalf and to represent you properly with your rights, and being able to take you through the whole process of buying a home. They have a very difficult job. As you know, they are always busy, seems like, and they can help you find that home, as well as selling, right? If you're selling an asset like a home, you can rely on a realtor for their experience with regards to sales data and how they will market the home for you, and how they will be able to negotiate as well on your behalf when representing you as the seller, to being able to just get out there and get your home listed properly on realtor.ca. There's a lot of different realtors out there, so I always recommend dealing with a realtor that is full-time in the industry, not a realtor that is part-time, because a full-time realtor can dedicate their time to you, same way as me as a full-time mortgage broker can dedicate my time to your file for a mortgage pre-approval, approval, or whatever we're looking at. All right. So that's some information there on National Real Estate Day. Why we celebrated, just to go over that again, it's to build equity as you pay down that mortgage over that 25-year period. You have that equity available to you once you pay off your home, and you can sell your home for whatever the market value is, and use those funds for retirement, or you can turn your home into a income property by renting out a portion of it, either a basement suite, a second unit, third unit. If you're living in a triplex, you can rent out storage from a shed or a garage. You can rent out your garage to a car enthusiast or a boat owner. You can do a multitude of things with creating income from your property. You can have tax write-offs by being able to improve your property for the purposes of creating an income, which can lower your taxable income. Make sure you talk to a tax professional about that and exactly how that works. And you can also have pride of home ownership by being able to actually create a more consistent and stable future for your family by being able to be in one place without being subject to the landlord's or homeowner's schedule and what they have planned to do with the property. So what I wanted to talk about on top of this today is some of the news that's coming out of the market for homes and mortgages. And one of those things is that the national average Canadian house price in April of 2023 has actually gone up again by 4.3%. So as of now, since February of 2022, we saw the prices going down, but in the last 4 months, I have seen that the national Canadian average house price has gone up 4 months in a row. We saw an increase in February, we saw an increase in March. March was a big increase of 8%, and then we saw an increase of 4% in April. Sorry, the big increase was February. January, February, March, and April, they have gone up. We don't have May's data yet. May's data will be out mid-June. But what does that mean? Well, that means that houses in Canada are again becoming more expensive. And this is correlated directly to what I follow, which is the 5-year fixed Canadian bond yield. And in March, January, February, March, we saw a slight decline in the Canadian bond yield. And since March, we saw a larger decline in the Canadian bond yield, so much so that fixed rates started to fall. And when fixed rates started to fall, a lot of my clients realized, you know what, we can now afford $10,000, $20,000, $30,000 more on that home pre-approval because of rates falling and our stress test has gone down, and we're now able to qualify for a slightly higher mortgage. And what that meant, those buyers that were ready and that were able to go out and buy a home took advantage of that slight increase and put offers down on properties that were coming available and were able to get into the market at a slightly lower interest rate for approximately the same payment that people were getting into just months before. Now with house prices gone up 4 months in a row, average Canadian house price sitting currently at $716,000, what do you guys think is going to happen to the average Canadian national house price? Well, let's talk about the Canadian bond yield and where it's at today. Well, we saw Canadian inflation, and I'll get to that in a moment, go up just slightly in April. And because of that, the Canadian bond yield, the market prices the bond yield based on where they think inflation is headed. It jumped, and it's jumped about 45 basis points in the last 7 days. That is a massive jump. It's almost 0.5%. So with a 45 basis point jump, I can expect to see fixed rates rise over the next few days. And because of that, if they actually rise another 0.45%, 0.5%, that will actually erase that extra affordability that was created since January. So if that happens, we may see house prices lag for a few more months after this, or they might start declining again because rates have gone up again. It's sort of a cascade effect as what happens into the future. But the Canadian bond yield, it predicts fixed rates in Canada, and the Canadian bond yield is impacted directly by the inflation rate. And as mentioned, I was going to talk about the inflation rate, and inflation went up in April. It went up 0.1% to 4.4%. That actually represented the first increase in inflation since June of 2022. Since June of 2022, we have seen inflation declining on a steady basis. So almost a full year of inflation declines. Mind you, it is still very high. In March, inflation did clock in at 4.3%, and it's still very high at that rate as well. But 4.4% in April. And I'm hearing that the reasons for inflation being so high are interest rate costs and interest costs with the higher rates. And I've heard even professionals in the real estate industry go on and say that the only way that inflation will come down now is by interest rates being adjusted further downward. What do you guys think about that? I'm not sure. I'm not the absolute expert here. I know that when I do groceries, my prices are much higher than they were 2 years ago. And when I buy gasoline, they're much higher as well since 2 years ago. I don't think inflation has subsided as much as these numbers are saying. However, if we do go by the numbers, 4.3% in March, 4.4% in April, and because inflation went up, it did push the bond yield up. And because the bond yield went up, I predict that we will see fixed rates rise in the next few days or a week or two. All right. And that's going to raise some of the affordability, as I mentioned, that was created over the last few months as fixed rates came down. So, what else did I want to talk about? Well, one of those things I wanted to talk about is job market, as well as I wanted to talk about the Bank of Canada interest rate announcement that's coming up on June the 7th. Well, in April, we did see an increase of 41,000 jobs in April. That's another plus 0.2% increase in April. We had a 0.2% increase in March, so that's 2 months of identical increases. Most of these jobs were part-time, however, so it's interesting to see that, but more jobs in April. So that obviously gives the Bank of Canada 2 reasons now to raise interest rates in June, and I'll get to that in a moment. But one being inflation going up for the first time since June of 2022, and another reason that the job market is still strong and there's no decline in the job market. The only way I've seen the Bank of Canada really decrease rates is when jobs are on the decline and unemployment is going up, which is not happening. Another reason I think why the Bank of Canada has upwards pressure to increase rates in June is the bond yield going up 45 basis points. That's a market reaction to how inflation has gone up. And you know what? I think another reason why the Bank of Canada may move to increase rates on June the 7th is that the house price average in Canada has gone up another 4.3%, representing 4 months of steady incline in the average national house price. One thing that does predict variable rates and the competitive advantage of a variable rate is the CDOR rate in Canada. That's the Canada Interbank Rate, and that's currently sitting at 5.4% as of May 18th, and that has held steady since approximately January of 2023. What does that tell me? It means that the market may not be actually predicting a variable rate rise as much as we think. However, that's where it is sitting at 5.04%. And because the variance to prime rate, which is currently sitting at 6.7%, is less than 2%, I would strongly recommend folks look at a fixed option when they are doing their mortgage. And with regards to fixed, I have been seeing a lot of customers and clients of mine going into 2, 3, and 4-year fixed rates because the consensus is that rates will be high for a little bit, but not for the long term. So locking in for a full 5 years sometimes seems a little bit too conservative for where a lot of people are thinking the market will end up. Where do you think? I don't know. I do hear a lot of arguments for the 5-year fix still, and they do seem convincing, but it's all about your personal preference, and always talk to your mortgage professional about where you see yourself at with risk tolerance and also your plans for the next few years. Okay, so we've talked about the CDOR rate, the Bank of Canada announcement coming up on June the 7th, the bond yield, the jobs market, the Canadian inflation rate. The American inflation rate, it's sitting at 4.9%. It did go down 0.1% from March, so not a big change. It's sort of flatlining here as well. And June 7th. So we have a rate announcement coming up on June the 7th, 2023. That will happen at 10 a.m. I'll be spotlighting that rate announcement live on June 7th here on Canadian Mortgage Weekly for a special episode on Wednesday, June 7th. We'll be starting the episode a little early at 9:45 a.m. and just going over some of the news and data going into that rate announcement, covering the announcement live right here on Canadian Mortgage Weekly, and then going into some of the impacts that the rate announcement will have. Obviously, if rates go up, then a lot of variable rate holders for mortgages and lines of credit will see their payments going up. And if rates go down, the opposite is true. We will see rates going down cause a payment decrease. And if rates stay the same, it's pretty self-explanatory. Everything will remain the same and not really change and continue on forward. So it's very interesting to see what do you guys think will happen in the rate announcement for June 7th. Do you think rates will go up? Rates will go down? I know that with the information I'm seeing, the jobs market continuing in a positive trend, the 5-year bond yields continuing on its increase recently due to the inflation numbers coming out and the average national house price on the increase as well. I think there's a good chance the Bank of Canada may use this opportunity to raise rates by 0.25% on June 7th. I know that's a lot of negative information that you probably don't want to hear. However, that's where I think rates are going to be headed on June the 7th. And how that is going to impact the housing market, well, I believe the way that will impact the housing market is that we will probably see a little bit of pullback from the housing market for a few weeks while everyone gets used to the higher rates. And if rates do go up by 0.25% on June the 7th, prime rate will climb from 6.7% to 6.95%, approaching 7% on prime rate. And a lot of people who have home equity lines of credit with rates at prime plus half or prime plus 1 will see their rates approach 8%. All right. So if you have any questions, my name is Joe Bladek. I'm a mortgage broker in my 13th year. I've been servicing clients all across Ontario. This is my 13th year doing that for mortgages. If you need mortgage advice, you can reach out to me on Facebook, Twitter, Instagram, TikTok, WhatsApp, LinkedIn, any of those platforms, as well as text and Skype. I can meet with you over video, text, or email, or phone, or in person if you're in my local area, and be happy to take a look at your mortgage, give you some advice on where you should be headed today. And thanks for watching Canadian Mortgage Weekly, Canada's only weekly video mortgage news podcast specializing in mortgage information for the client. And that is episode 138 today. Thanks for watching again, and happy National Real Estate Day. Looking forward to May 17th next year, 2024, to celebrate National Real Estate Day again with all of you. In the meantime, let's give a hand to our real estate agents out there working hard, getting homes for people and helping people sell their homes. It's a great thing that they do, helping everyone get into the market and, just being able to represent you properly. And with that, my hat's off to you. And thanks for watching Canadian Mortgage Weekly.